We're live, everybody. Welcome in. It is Monday, October 16th, 3:10 p.m. Central Time. I hope you had an amazing weekend. We have a couple news items we want to go through today in preparation for the week. Some of the big things that are going on this week is Tesla's earnings, which will happen on Wednesday. I'll have a big live stream for that, so make sure to come back to this channel to see the coverage for that. But for today's news, I really want to focus on Ford and Lucid specifically. Both automakers are in the EV, electric vehicle segment, and there's been a lot of stuff happening with Ford as of late, especially today, that I really want to cover in this episode. So let's go ahead and get started. If you're joining us live, make sure you can hear me okay. And then if you're joining us in recording, welcome. Hello. Sorry we missed you live, but very happy to have you with us now. So here's a news item from CNN, everyone's favorite website and news article source. Ford lays off 700 who were building electric version of F-150. And this is separate from the current UAW, the union stuff that Ford is going through, which is kind of fascinating. And I want to read this article for you real quick and kind of give you my thoughts. I'll move myself to the right so it's a little bit easier for us to read together. Ford is laying off about 700 workers who build the F-150 Lightning, the electric version of its best-selling pickup truck. And unlike other recent layoffs, this one has nothing to do with the ongoing strike by the United Auto Workers Union, which is that UAW, which started their strike about a month ago. The company said it will temporarily cut one of its 3 shifts at its Rouge Electric Vehicle Center in Dearborn, Michigan, near the company's main headquarters. It will rotate the layoffs between the 3 shifts, where basically doesn't matter what shift they're on, there's going to be some sort of layoff between all of them to try and do some stuff. And this next paragraph, it will tell you what they're trying to do. And I have some thoughts about that. Ford had temporarily closed the plant this summer to upgrade its production capability. And the company said this latest layoff is related to multiple constraints, including the supply chain and working through processing and delivering vehicles held for quality checks after restarting production in August. Now, I have a lot of thoughts about that specific paragraph because it's sort of, if you highlight other trends that are going on with Ford, it seems off, and I'm not saying the company's lying or anything like that, but with some of the stuff that I've been covering in the EV space and my previous experience working at different companies, usually when a company says something, you have to look at the data and see if the data lines up with what they're saying. So when they say that there's supply chain challenges, I find that sort of difficult to believe because we're way out of the COVID supply chain stuff that would have been happening that they've fought through and theoretically they have figured out. And now they're claiming other supply chain challenges because of their electric manufacturing process. However, Ford is a company that is manufacturing about 4 million units per year, and they've been around for a really long time. So claiming that there are supply chain challenges nowadays is troubling. It could be that maybe the suppliers they hired for the F-150 Lightning, they're not performing as well as they should, but it's shocking to hear that kind of verbiage this deep into the production of their truck. Now, in addition to that, there's some additional things going on around this time that make this announcement very questionable, as a button sort of came out of my keyboard. That's never happened before. All right, guess I need a new keyboard. Ford lays off workers for F-150 Lightning on X, formerly Twitter. The reasons why I find this a little weird is threefold. The pickup trucks are the best-selling segment in the U.S., and lowering your ability to produce by laying off workers seems weird when the F-150 is in the best-selling segment in the United States. EVs are growing 50% year over year. So this year, even if you look at Ford's current lineup, the Mustang and the Transit van, the electric van, are performing really well versus last year. But somehow the car or the vehicle that's fit to be the best-selling product is not performing as well, and they need layoffs. Strange. And Q4 is seasonally the best quarter for auto sales. And so that one is even more shocking to me. So you have a pickup truck, best-selling segment in the US specifically. You have EVs growing 50% year over year. And you have Q4 coming up. We're in it now. And now you're taking steps to lower production, right? If you look at the seasonality of auto, Q1 is usually the worst, especially if you take out COVID. Q1 is the worst by far because everybody has bought their cars for Christmas, Thanksgiving. The Toyota-thon commercials that you see every single Christmas season, and all these other holiday specials around cars and stuff. So this timing is super, super strange. Another thing I want to highlight. So if we look at, and I'll move myself to the right again, I have a new button where I can move myself. How cool is that? The blue line here is F150 Lightning sales by quarter. If you have been on my channel before, you've probably seen this graph. And by quarter, you can see how many F150 Lightnings Ford has delivered to dealers. In Q1 is around the time they started production, so it was very little. And they had a huge spike. And then since that Q3 of 2022, the F150 Lightning has been on a downtrend. And so has the R1T Rivian pickup truck in the green. But I would really want to highlight the F-150 one because, again, pickup trucks are the best-selling vehicles in the market, and there's already a downtrend, and the company is additionally laying off workers on this car, right? So if anything, I would have expected the opposite. I would have expected them to be upping more people and to figuring out the supply chain things earlier so that they can really have a big spike. But in reality, this highlights two major things with Ford. Number one, they have issues with their theoretically the best-selling electric vehicle product that they hope to make that are fundamental to them making it. Or number two, which might speak more to the broader trends in the EV pickup truck market, is that people are not really buying these en masse. And that's a bigger issue, I would argue. So in Q3 of 2023, so last quarter, they delivered about 3,500 F-150 pickup trucks globally, but they're just really selling in the US versus over 6,000 the previous year. So they're down 50% year over year. And they're down from Q2 of this year from about, call it 4,500 to about 3,500. So really strange signs for the F-150 Lightning. This is in addition to a report coming out from Reuters. UAW Strike could upend GM Ford financial strategy. And this really highlights that it's not just an F-150 issue. This is also a UAW issue that's causing Ford to have problems. If I highlight just a quick sentence or a couple sentences from the article, the mounting costs of the United Auto Workers, the UAW strikes, and the eventual rich contract settlements are putting those plans at risk. The plans of putting EVs out and growing their businesses, so on and so forth. Analysts said reduction in capital spending, delayed EV targets, greater sharing of costs, and other changes to the corporate portfolio is another word for everything that you have, could be on the horizon. Morgan Stanley analyst Adam Jonas, shout out Adam Jonas, my favorite Jonas brother, told clients in an October 12th note. So the reason why that's a big deal is, and we've talked about it before in this channel, is that now the UAW has Ford by the you-know-what in negotiations, especially as their future products in the F-150 Lightning is being hampered by something. It's unclear what that hampering is. And then if these strikes continue, Ford is not going to be able to make cars for one of the best seasonal sort of quarters in the year in Q4, especially with last week's announcement on Wednesday, the surprise strike for their most profitable and one of their largest plants. So they're not going to be able to make some of the most profitable cars now for the fourth quarter. And then in addition to that, say you come to a settlement and the UAW gets you to pay them 30% more, which again, I'm not for or against any of that. Generally speaking, I'm for people getting paid more who wouldn't. But it highlights again that this is a lose-lose situation for a company like Ford in this example, because if you have a strike, you're not selling cars. And if you do resolve the strike, you're going to pay more for your workers, which is going to create more costs for your business. And now you're going to are dealing with this F-150 Lightning thing, and it's going to cut into your profits. And you have a company like Tesla that's coming in and stealing all your EV market share. At least theoretically, it will be able to do so as well with the Cybertruck, which is their pickup truck that's coming out here in the next couple of weeks. It's wild. It's a wild dynamic for these legacy automakers, specifically Ford. And I really want to highlight another thing about the story that's developing is that Bill Ford, who's the great-grandson, somebody correct me if I'm wrong, of Henry Ford, the maker of Ford. And this was a quote from him today. Toyota, Honda, Tesla, and others are loving this strike because they know the longer this goes on, the better it is for them. They will win, and all of us will lose. Now, it's important to keep in mind that when you have these public shows between the UAW and Ford, as an example, there's a lot of backroom deals going on, and these things are usually in the public. You're trying to just muster support, and it's a lot more politics than anything. It's just negotiation. But that quote is very, 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 very accurate, I would say. All of these steps that are happening with this ordeal, F-150 Lightning not performing as well as it should, having issues of some sort, puts them at a greater disadvantage against their biggest competitors. On the gas side, your Hondas, your Toyotas, your GMs, so on and so forth. But GM is having their own strike, and so is the Stellantis here in the US. But specifically around EVs, Tesla becomes your biggest competitor, and you're additionally hampered to move forward while this is going on. If I go back to my previous example of UAW causing more costs for the business, if, say, their labor goes up 30% for the union workers, a lot of people are doing math that says this is going to be somewhere between 5 to 8% of their total, basically their total costs going up, which is going to eat dramatically into their profits. And when you have a giant company like Ford, they're not really in growth mode anymore. They're really in cost-cutting mode. And when you're a public company, what the investors are going to call for is cutting your least profitable or your things that you're working on that are generating the least amount of money. For Ford specifically, it's their EV segment. Their EV segment's losing about $1.5 billion per quarter right now, and they're expecting to lose about $4.5 billion in 2023. So this might cause Ford to switch strategies. They have to sit down and be like, oh my God, we have to, we might have to scrap a couple things for cheaper vehicles. We may have to focus on low volume, high profitability vehicles, hopefully that people will buy. But then that sort of deletes Ford's ability to continue being a mass automaker, and it will reduce their size from, say, maybe a 4 million per year car company to maybe 1 million or less. And it's stuff like this, it seems small at the surface, but it's generally stuff like this that can cause that dynamic, because you're not really set up to absorb that. You're already this huge behemoth, you're this giant ship, and you're trying to steer around, and the UAW, right or wrong, is like, nope, you're just not going anywhere. It could be like a Titanic type of metaphor, which would be really sad for everybody involved. Another dynamic. This is a lot of information today. Sorry. Or not sorry. If you're coming here for the information, great. I'm happy for you. All right. I'll move myself to the right again. I want to highlight just how big of a challenge this is from a cost perspective for a player like Ford, and why time and persistence is important for a company to be able to navigate through this very weird environment for electric vehicles, specifically for legacy automakers. Back in 2012, when Tesla came out with their Model S, the Model S P85, which was the fastest and best performing Tesla at the time, the range was 265 miles of battery range. The 0 to 60 performance was 4.4 seconds. And the starting price of that car was $94,900. Not a cheap car. Fast forward 11 years later, the Tesla Model 3 Performance, albeit a smaller car than the Model S, and some would argue probably less luxurious than a Model S today, but I'm willing to bet the materials in that Model 3 are probably better than the 2012 Model S P85. Range, 315 miles, 0 to 60, 3.1 seconds, and the starting price, $50,990 before any federal EV tax credits, which will lower that price by another $7,500. So after 11 years, the Tesla Model 3 Performance is 47% cheaper, 30% faster, and has 19% more range versus the fastest Tesla and the best performing Tesla versus 11 years ago. And the reason why that's such a big deal is because non-unionized companies like Tesla, like BYD, and other startups potentially, BYD is a car manufacturer out of China, they will always have a natural advantage against unionized car makers or against car makers that have been around for a really long time, because they can go towards this without any obstacles. Or they have the foundation to go towards this because they don't have decades of bureaucracy and crap that's weighing down the company. This right here is by far the most important dynamic that's going on. And if you're a company that's not able to make a lot of money or is not able to navigate really rough waters, and you're fighting with yourself, essentially with your own workforce, you can't get here. Oh, I'm clicking on the wrong screen. You can't get here. It's going to become very, very, very difficult. Or you could get there, but you're not going to be making money. And Tesla's able to do this while making money, right? This is not a go buy a Tesla or don't buy a Tesla thing. I'm just using Tesla as an example to highlight how challenging of an environment this is for a player like Ford. I think their cars are awesome, to be honest. The Ford GT is one of my favorite cars of all time. It's a gorgeous sports car. I think the F-150 is sick, the Lightning, but the reality is the reality, in my opinion, and it's hard to argue. So let's talk about Lucid real quick before we do a little bit of Q&A and jump out. So Lucid is a car company based out of the US, and I'm checking something real quick to see if they've posted it. They haven't. This is shocking. So Lucid is an EV automaker based out of the United States. Let me show a picture of it in case you're not familiar with the car. And one of the interesting things about Lucid, rather, if I can talk English, this is what it looks like. Gorgeous car. Is that they are in a weird spot right now because they're trying to ramp up production for a luxury SUV that's coming out sometime next year. This is their best-selling, they're already the only product. If you look at it from a purely engineering perspective and just the technology, it's a phenomenal car. The UI looks weird, it's slow, the software in the company from every reviewer, but the car performs absolutely beautifully. Really, really a great piece of engineering. However, from a company perspective, Lucid, in my opinion, is in a very difficult situation. The weird thing that has been happening in the last few days is that every quarter, a public company like Lucid has to report their deliveries and they have to report the deliveries and production. They do, but in the last few quarters, they every single call it 1 to 2 weeks after the quarter ends, they've been reporting deliveries and production, and it's usually around the 12th or 13th of that month. It's the 16th, and we still don't have those numbers from Lucid. And the reason why that's a big deal, at least to me, and let me know if it is to you as well, is that if you're looking at their deliveries and production for the last 3 quarters, they have been declining. And the reason why that's an issue is because if you look at the broader EV market, EVs, especially in the United States and globally, China and Europe as well, they're growing 50% versus last year. So you're having this giant growth in electric vehicles. But Lucid, as of the fourth quarter of 2022, they've been declining in both deliveries and production. And typically what happens is when you're late in delivering news, unless Lucid breaks the trend here, and I hope they do, is that you're probably going to deliver some bad news. You're probably going to deliver some bad news. And the reason why that could be an issue is you're already in a downtrend, and if you come out with numbers that are potentially less than this, it might send off a huge alarm to investors that say, "Oh my God, we might be in trouble," or the investors will read it a certain way and be like, "Wow, you were late, and then you also gave us bad news. What is going on?" Right? So it could create a very weird situation for the car company. Additionally, for Lucid, if you look at their revenue, which is basically sales, like dollars in sales, and their free cash flow, which is, what's a simple way of defining this? Basically how much money they burn each quarter after they take into account everything. So after they pay employees, build their factories, use money for investments, free cash flow is a measure of essentially how much money you have in the bank pre and post the period, and the difference is your cash flow and your free cash flow. Kind of. Accountants, don't kill me, please. So Lucid right now, if you look at the last quarter, they burnt about $800 to $900 billion of cash. And they've been sort of burning more cash for the last few quarters, Q2, Q3, Q4, Q1 of this year, Q2 of this year. We don't have their Q3 numbers yet, but they're in a steady downtrend and burning more and more money. And this is normal. For a company that's trying to build up their production, this is a very normal happening, very normal trend. However, I want to compare this to, again, Tesla, to kind of give you an understanding of why this is such a big deal. If I go to this page, this is the Q2, is it the Q2? Second quarter 2019. The Q2 2019 earnings report from Tesla. And this is highlighting the vehicle deliveries, so how many cars Tesla has delivered from Q2 of 2013 all the way through the second quarter of 2019. And these gray bars are free cash flows, basically how much money the company was making, or cash, how much they were burning through or accruing in their bank account per period. So the Model S launched back in 2012, and then 2013, you can see here, very low deliveries and a little bit of cash, just a little bit. But that was their first profitable quarter. Stock went crazy. And then what happened? They're like, okay, we're going to go into the Model X. We're going to start making the Model X. So what happened? The deliveries started going up again during that period. But as they're ramping their production, huge impact to cash flow, right? Because it's expensive. It takes a lot of cash to build up car companies. Then they reach profitability again. Model X is ramped. Yay, we're actually making money again. And then what happened? Model 3, boom. Again, a huge hit to free cash flow. But the result from that was big deliveries, right? You can see it. Every time they spend a bunch of cash, deliveries go up. Every time they spend a bunch of cash, deliveries go up. And that's how companies work. The big problem with Lucid, though, is that this chart right here with the free cash flow, this is basically the free cash flow, which is almost $1 billion per quarter. And that's their revenue, which you can kind of think about as deliveries, or think like deliveries, which is this blue bar here as well. They're going through this period of cash burn with only one car. So what it means is once they release their luxury SUV, they're going to take another huge impact to cash flow. And the amount of cash they have on hand is only going to last them for another year and a half in a best case scenario, which is to say that unless Lucid reverses the current trend that they're in of less deliveries and burning through more cash flow, I have a very hard time seeing how this company survives in the long term. Now, they did make a pretty big hire lately. They hired Corey Steuben, who, if you know that name, he used to be at Monroe. He used to be partners with Sandy Monroe. I've met him multiple times in person. I actually consider him a friend. I think he's one of the nicest guys I've ever met. Super, super smart. He just joined Lucid a few weeks ago as one of their directors to work on their next generation products. So I just want to really highlight just sort of like, even though I know Corey personally, he's a great guy and he's joined the company, I think he's going to do great things at the company. It still highlights just how kind of a difficult situation Lucid is in right now as a company trying to ramp their EV segment. And I want to put it within context of the Ford hardship as well, because this is sort of like it's a very weird time in the vehicle segment. It really is. You have all these long-standing companies and Ford, GM, Stellantis, Volkswagen, Toyota, Nissan. There's like all these different levels of investments into EVs. Then you got a bunch of startups in Lucid, Rivian, a bunch of other ones as well. Tesla has been around for a little while now, and they're by far the most successful out of all of them in the EVs. But now you're starting to see sort of things are starting to break in places. There's like little hints of breaking. And one of my favorite things on this channel is covering that. It's just trying to be as impartial as possible, covering it at face value, and then you telling me if I'm doing it fairly or not, right? So let's do a couple comments before we wrap this sucker up. And yeah, it's just a fascinating dynamic in the car segment. And we have 1,134 viewers live. Thank you so much. If you're watching this recording, mwah, love you. And if you're watching this on live, mwah, love you as well. My God, I love everybody. Okay, let's see what people have to say. Tony, longstanding member, thank you so much for the comment, Tony. I've seen the Lucid in real life a few times. Someone in a local EV owners club got one. I don't get the appeal. Yeah, I respect that. I've seen it in person a few times. I really like the styling. I really do. I think it's a gorgeous car. And from all the metrics, I mean, the engineering is incredible, but it's the business. The business needs help. I think what Lucid has done is I think they have overcommitted too many resources and they've built too big of a company for how many cars they can actually sell. And like it's almost like they have what's a good analogy? It's like if Ford was trying to be Ferrari. Like Ford invested all their money to try to be a Ford, but it ends up only selling Ferraris and you have this extra stuff that you're paying for that theoretically you don't really need. So it's weird. It's really, really weird. We'll see. They might go private, honestly. Lucid might go private. I read a comment earlier today where somebody said the reason why they're late with this is because they're trying to they might announce something big. And I'm like, yeah, might be. Per Johan, another member. Thank you so much, Per Johan. Farzad, will you do a thorough review of your Cybertruck? Come on. Of course. Of course. I'm very much excited for that car. It's going to be nuts. It's going to be absolutely nuts. Cybertruck will be out before Lucid's Q3 numbers. I hope not. I hope not. One of us is going to be waiting a long time if that's were the case. Cool. And then do we have Lucid numbers yet? So I'm on their press release website. Still nothing. And usually what happens is at the end of the day, at the end of like market close, which closes at 4 p.m. Eastern, 3 p.m. Central, that's typically when news and reports come out for companies. And I'm on their press release website and I'm not seeing anything yet. So I don't know, man. Something's going on. I really think they're prepping something, some sort of statement that's going to go along with the deliveries. So we'll see. Lucid survives because of Saudi money. Yeah, I thought that too. You know, so for those that are not familiar, Saudi has they're by far the majority. The Saudi sort of, I forget the exact name of it, but it's basically the fund, one of the Saudi funds owns I believe 60% of. I forget what the number is. Somebody correct me in the comment section below. A lot. The Saudis own a lot of Lucid, and the thought process is, okay, so even if Lucid's going through hardship, they're going to throw money at the company to make sure it stays alive. But at some point, even the Saudis that have a ton of money in their bank account, they're going to be like, yo, this is not really returning what we're looking for. We need to make a change. And that's why like the private discussion is actually one that's fascinating, because they could take it private. You know, they can basically do whatever they want at that point. You don't have to do any public reportings, and then just shift everything to Saudi Arabia, make it just like a Bugatti competitor and call it a day. And that means Pete Rawlinson probably goes bye-bye as well within that context, who's the CEO of the company. So my opinion. Let's see. Okay. Oh, here we go. Can Corey and Joe change Lucid and Toyota for good? Ishan, member for 16 months, the GOAT. Thank you so much for your support, Ishan. You're awesome. Yeah. So I'm assuming you're talking about Joe Justice, who's a lean manufacturing advisor dude, and then Corey. Obviously, we just talked about Corey Steuben from Monroe Live. He's a director now at Lucid. I mean, they could. Of course, they could. You know, I think they're both very talented. I know Corey personally. I think Corey is a phenomenally talented and super smart, bright individual. If there's somebody that can actually help out the companies, it's probably him. You know, and I truly wish Corey and Lucid nothing but the best. I really, really do. But the numbers look odd. Look odd, and I mean, odd's not the right word. They look very challenging. They look very challenging to overcome. They need very talented people. So you got to get talented people. And Corey's extremely talented. So who knows? Maybe Corey will be the new CEO. I don't know if he wants that gig. Farzad, I would like to do a shout out for Best in Tesla coming up on his 200th episode. Congrats and greetings from Canada. Giddy up. Thank you, James. Best in Tesla, Lars. Make sure you go check him out. He's a phenomenal channel. All right, we'll end it there. Thank you so much for stopping in. I hope you have a great day. Tomorrow we'll do a Q3 2023 Tesla earnings preview. And then on Wednesday, we'll have a giant stream covering Tesla's quarterly earnings report. We'll probably be here for like 3-4 hours. We'll be before market close. We'll be here before market close. We'll be here covering the earnings slide live. And we'll also be here for the call and post-call reactions with a bunch of people. So Matt Smith and 1,000 other people. So not 1,000, a few other people. All right, everybody. Hope you have a great day, and we'll see you tomorrow. Mwah. Love you guys. See if I remember how to do this. Oh, yeah, I do. Bye.